Thank you. Very nice introduction. Thank you for having us here. Just a bit about the practice more generally, since you've heard of our bios. We have the largest shareholder activism defense practice in the world. Over the past 6 years, our team has defended over 200 shareholder activism campaigns. That's more than any other law firm by a margin of about 40 to 50 campaigns. Our practice represents boards and management teams of public companies across every market capitalization and industry. Just to be specific about market capitalization, we have represented companies with market caps of under 10 million, and we just completed a shareholder activism campaign defense for a company that had a $40 billion market cap. Most shareholder activism, however, is between approximately 500 million of market capitalization and 3 billion, and that's where we normally are because that's where all the campaigns are. But we go bigger, we go smaller. Most of our attorneys are in New York, although because our firm is, of course, based in Texas, we have a number of highly specialized attorneys across all of our offices in Texas. We have lawyers in DC and California that help out on activism matters as well. Desi and I only do this if shareholder activism goes away, although we suspect it's not going away. This is actually an interview for you to possibly hire us as in-house counsel as assistant GC if this asset class goes away. But thankfully, because of Elon Musk and others, it appears that it's here to stay. I'll also just say this about Desi, because the bio that was given wasn't enough. Desi really helps us run this practice. She's more than just a senior associate. She is one of the practice leaders. And with that in mind, I'm going to now hand it to Desi to lead the discussion. I would encourage everyone to interrupt us frequently. Feel free to cross-examine us. If you have any questions that are just keeping you up at night about shareholder activism, just feel free to stop us and ask. Otherwise, we'll run through the presentation, and you can, of course, ask questions at the end as well. But don't be shy. We like to get pelted with questions. So, Desi, I'm going to hand it over to you.
So economic activism is really where we are seeing campaigns originating from. When we speak about our bios and the consent solicitations, withhold campaigns, proxy contests, that's what we're talking about when we're talking about economic activism. And this is because when you have an activist shareholder, they are beholden to their funds, to their investors. And they want, when they're screening companies to target, they're looking for an area where juice can be squeezed. That is, where there is a company that its intrinsic value may be higher than what the market has seen its value at, and there's a valuation gap that would allow the activist, if the company were to follow its thesis or proposals that it suggests, that the shareholder activist can unlock that value for other shareholders and itself. So a lot of these campaigns are originating from the economic activism, but that's not to say that these are three distinct and separate buckets, right? A lot of our campaigns, we see overlap between these. Especially, there are certain shareholders that will focus, Chevedden, CalPERS, that will focus specifically on particular elements within social activism, ESG matters that are becoming increasingly prominent. But at the end of the day, if you take a look at, for example, the ExxonMobil Engine No. 1 campaign, that was heralded this past year as an activism campaign where the environmental themes were front and center. And as you go through the public filings of it, you really start to see that Engine No. 1's campaign at Exxon was, at its heart, was economic in nature, right? Their arguments were that the company was not putting forward adequate measures to prepare for the long-term energy transition And even though those were environmental, they tied it to the bottom line that may make it more difficult for the company to continue with its dividends. And really, like, at its heart was an economic argument. So while we do see these themes come up, and I think we will continue to see them turning into, this proxy season and beyond, a lot of this is still centered around the economic argument.
Put another way, when we're talking about activists like Starboard and Elliott and Icon, they first need to identify a way to make money on their investment. The securities are undervalued. They think there's a way to unlock value. Once they've determined that the economic thesis is available, you are going to start hearing in these campaigns about governance lapses and then obviously social lapses as well. These themes all now go hand in hand. What happened in Exxon was it was the first time an activist had really been successful in tying being good to the environment to a good economic outcome for shareholders and for the company. And that was really the first time there was a pronouncement by ISS and Glass Lewis and BlackRock as another example to make pronouncements about the environment and how it could also have a good economic impact for shareholders. What we like to say, and if you could flip to the next slide, these are, at the end of the day, these are election contests. And just like in a political election, the folks running for office are slinging mud at each other in order to win votes. And sometimes they're not slinging mud, sometimes they're diplomatic, a little velvet glove, iron fist. At the end of the day, the boards and the activists are vying to get their candidates elected to run the company. So this is a battle for control at the end of the day, and it works very much like an election contest. The reason several years ago we started seeing a lot of ESG coming into these economic campaigns was because the activists knew that the BlackRocks of the world wanted to hear about it. So it was very much like a politician kissing a baby in an election year. The voters like to see that generally, depending on who the politician is. But BlackRock, Vanguard, State Street, and Fidelity, they like to hear about advancing the ESG initiatives as well. But at the end of the day, a public company has to hold an annual meeting approximately every year, depending on what state you're incorporated in. And there's a window of time each year for an activist to put up an alternate slate from the slate that the company is putting forward. And if that happens, you're in a proxy fight, and at the end of the day, the candidates with the most votes win. So it very much plays out like an election campaign, where if you're looking for fairness, you're probably better off looking somewhere else. On the next slide. In the 80s and 90s, many of the activists that we're seeing today, Icon, Peltz, Singer at Elliott, they were corporate raiders. And it was considered to be hostile, and it was considered to be urgent and a blitz and a surprise. And those investors who made a lot of money transformed how they went about making money and how they went about galvanizing shareholders around the early 2000 timeframe. So for the past 20 years, there's been a transformation. These raiders have rebranded themselves as shareholder activists. I mean, you now have Carl Icahn actively campaigning to treat pigs very fairly. It's almost something in there about pigs flying. There's a joke in there somewhere. But it's been a complete rebranding. I mean, Icahn 15, 20 years ago was making hostile bids to take Smithfield Foods, which was a public company, a pork processor, private, and his theme was take it private, cut costs, probably treat the pigs more poorly, and now he's out there trying to raise money and galvanize shareholders on the topic of treating animals fairly, which is a good thing, but it's a complete transformation, and we're seeing the other activists do the same thing as well. It's now about shareholder activists looking out for minority shareholders, taking from the entrenched boards and redistributing the wealth back to shareholders where it rightfully belongs. And it's been galvanizing shareholders. And every year, Desi and I and the folks that run the practice with us, we're always concerned that activism is just going to peter off from the previous year. But the activists continue to rebrand themselves to find creative ways to galvanize shareholders and to make headlines. And it's keeping our board and management clients really on their toes for what the activists are going to do next. Next slide.
And Lawrence, I was just going to say also for that, this rebranding, it's the benefit to it, not just in terms of the optics that Lawrence has mentioned, but also you can take a very small minority stake in a company, right, to run a proxy fight. There's not a minimum threshold of share ownership for you to run your own slate, so long as you're complying with the company's advance notice bylaws. So from the economic perspective as well as the optics. Okay, statistics. So this chart, I think, is really depicting what Lawrence has mentioned, that we're not seeing that this asset class is going anywhere anytime soon, not just in the last few years, but really over the long term in the early 2000s. I think there was some, well, I guess to first back up, we see here, there are two sets of bars for each year. This is really making a distinction between campaigns and proxy contests. The campaigns, it's a much broader umbrella category. This can be anything where a shareholder sends in a letter to the board, Dear Chairman type of letter. They file a 13D. Whereas a proxy fight is really when you get a little bit further progressed into a campaign where an activist is actually submitting formal nominations to a company to submit its own director slate for election at usually an annual meeting. And also this is really capturing those campaigns that have been made public in one way or another. So we often see campaigns that an activist comes to a company, but for one reason or another they choose to keep the campaign private. And those stats are not reflected in these numbers. So even though these numbers are high and increasing, they're in reality probably even higher than what's reflected here.
I think one way to think about it is if you add the number of campaigns here, which is about 330, there's probably another 150 or so that never see the light of day. You're hitting more than 10% of public company America every year. And what's actually also interesting here between 2020 and 2021, you're seeing what we call the effects of COVID on activism. Even though activism was up 20 over 19, there were a lot of campaigns that we suspect never came into fruition in 2020 that then came back and were in hibernation and then came back with a vengeance in 2021. I don't like to make predictions. The general counsel of our law firm tells me not to make predictions, so I hope he's not listening. But I would expect the number of campaigns this year to look more like, high 280s to low 300s. I would be surprised if we exceeded 330 again. Last year, I think, was an anomaly. But I do expect the number to look more and still trend up and to the right when you look at the chart over time. The interesting thing here also is that since 2013, and we're looking back almost 20 years now, activism has quadrupled. It's at least tripled. So that's why we believe this is something that is here to stay. Activists just keep reinventing themselves every few years. And to give everyone just a reference point, we have 19 campaigns going on right now. in our practice, which is why we're both bloodshot-eyed and exhausted. We don't sleep until June normally, when our blessed boards have their annual meetings. But of those 19 campaigns, 5 of them are in public proxy fights for board seats right now. And we would expect that of those, probably only 1 or 2 actually go to a vote. And you'll see a chart a little bit later. The vast majority of these fights end up settling or going away.
And I think people were concerned, especially in 2020, because so many of these annual meetings take place in the second quarter of the year, what was going to happen to this asset class with activism. And especially because of the market volatility, a lot of activists seem to be reticent to engage in a full-blown proxy fight at that time, especially when companies had such severely depressed stock prices. As Lawrence mentioned, we did see this come back, particularly in 2021, and just as another testament that activism is here to stay. A lot of the work that we ended up seeing at that time was not necessarily the traditional proxy contest in Q2 of 2020, but an astronomical influx of companies interested in the shareholder rights plans that would address that market volatility, where to protect against when an activist investor would try to come in, buy up a bunch of shares of the company because the stock prices were severely depressed at the early onslaught of the pandemic. So, activism may not have taken the traditional form that we were accustomed to seeing, but it was certainly still a very busy time, and that's continued into the following year.
Just by a show of hands, do the folks in attendance know what ISS and Glass Lewis do, or should we give a little bit of a primer on how the proxy advisory firms work? Well, I'm seeing nods, not hands, so it looks like there's familiarity. So we're not going to give a primer. We'll just say ISS and Glass Lewis are proxy advisory firms. The BlackRocks and Vanguards of the world are way too busy to read every single proxy statement, and they look to proxy advisory firms like ISS and Glass Lewis for guidance on how to vote at annual meetings every single year. ISS and Glass Lewis are issuing thousands of recommendations, and they have very special teams called special situation research teams that will issue reports and recommendations during a proxy contest. And they issue these reports and recommendations. They read like judicial opinions. They read like arbitration awards. And if folks here have never read an ISS or Glass Lewis report in a proxy contest, I would urge you to do so. You can email us. We'll, as long as it doesn't violate our ISS and Glass Lewis licenses, we'll send you copies of them. It's a very important part of general counsel, C-suite, and board training, because the actions that you take as a company in peacetime and in wartime are viewed by ISS and Glass Lewis, who have a lot of influence. They're viewed through a very specific rubric. Most shareholder activism campaigns, the activist is going for less than a majority of the board. They're going for minority slate. And ISS and Glass Lewis will ask 2 questions. 1, is change warranted? And 2, if change is warranted, which candidates are most likely to be the agents of change that's needed? And when ISS and Glass Lewis look at the first question, is change warranted? They look at total shareholder returns, 1, 3, 5 years, more weighted towards 1 and 3. So if your board has had a bad year or a bad 3 years, you're already vulnerable to ISS saying change is warranted. And then the next piece of the analysis is, well, has the activist brought forth a director with experience that could actually help instigate some of the changes that are necessary? We find that boards that understand how ISS and Glass Lewis look at these matters in peacetime are much better able to help management teams shape the corporate narratives so that if they get caught with an activist, if they get caught with a bad quarter, they get caught with a corporate surprise, they're better situated to tell their story. So we think very important to not only for the in-house counsels to understand how ISS and Glass Lewis work, but the boards need to understand that it's a different team in a proxy fight at ISS and Glass Lewis, and their actions are going to be viewed through a different standard. That type of training, very important in peacetime. We find oftentimes that the boards we represent, we get brought in like ER surgeons. We get brought in and the boards don't understand, and the management teams do not understand how ISS and Glass Lewis function, and oftentimes it's too late. So that proactive training is very important. We spend a lot of time doing that when we can get in early enough. But if you look at the stats, and Desi, maybe you could flip to the Glass Lewis slide too. The last several years, ISS and Glass Lewis have been more board friendly. We've been calling that the COVID pass. Obviously in 2020, there were many less fights. Those boards did okay. Throughout those fights, there were a few companies that were probably in dire need of activism that didn't make it through, but most companies did. Last year and now into this year, we're seeing boards fare a lot better, and I think that's because ISS and Glass Lewis and the BlackRocks of the world are saying, look, you just did a fantastic job leading through a pandemic where no one knew how long it was going to last, how it was going to end, when the headwinds were going to go away, and when tailwinds would be created. And I think the boards are getting a bit more runway than they usually would to be able to get companies back on the right path, particularly the companies that were the hardest hit during the pandemic. Although at some point, these boards and management teams who have made promises to shareholders, they are going to be held accountable. And there seems to be a little softness in the market now, particularly in the tech space. And we would expect to see more activism rising up in those areas as a result. Next slide.
So this is a slide that Lawrence was referencing with respect to campaigns that do end up settling as opposed to going all the way to a vote at the annual meeting. Now, there's a couple of reasons why either the company or the activists may be interested in a settlement, even if it looks like, based on voting projections from your proxy solicitor, that it looks like the results may be in your favor at the annual meeting. Because a settlement can give you benefits that the actual election may not. And I guess the most straightforward of these would be it can be more cost effective, right? These proxy fights don't come cheap, right? The proxy statements that we see disclose solicitation costs around $500,000, give or take the length of the time of the solicitation. And so a company and activist can save some of this by going through the negotiation process of a settlement and avoid some of the mudslinging or smear campaign that you often see in the fight materials that are leading up closer to the annual meeting. For an activist, there are also benefits in that it's typical in these settlement agreements that their expenses for the campaign can be reimbursed by the company, negotiated to a specific cap on that. And also, if like Lawrence mentioned, if an activist thinks that they may get 1 or 2 seats on the board as opposed to a majority of the board, an activist may be concerned that their 1 or 2 directors that are successfully elected are going to be marooned on an island in the board, right? That they're not going to be given any sort of meaningful input other than their 1 board seat, 1 vote. And so what these settlement agreements have is a mechanism for activists, for their nominee that's to be appointed to the board, that they're also appointed to specific committees of the board. We've seen activist nominees that have been appointed to all of the standing committees that the board has, or even like board observer rights, replacement rights if their board designee is not able to serve. Now, from the company side, the company may want to settle because what they're going to get out of this mostly is the peace and quiet of having the activist withdraw its nominations. They withdraw the nominations, they may have a campaign website that they take down. They're obligated under these agreements to stand still, and not just with the nomination. Is really getting the certainty of the peace and quiet, at least with respect to that one particular shareholder during the length of these agreements.
I would just add this is how, as a practice, we look at settlements. You normally have two options when you're facing a proxy fight, because you're definitely dealing with an activist that is going to be stubborn, right? They believe that they need their directors on the board. They need them to run a sale process immediately. They need the CEO gone, or they need other changes. And they're going to be very insistent. And there are two paths for the board to go down. You can go down the, do whatever it takes in year one to squash the activist. And I can tell you that with all the campaigns that we've done, we have in our toolkit every single tool available to get a board through a proxy fight in year one. And when we take these things to a vote, we take them to a vote to win, and we do win. We've lost a very small amount of fights at the ballot box. But what we have found is that for the noisier, nastier fights, we found that we get those boards through year one, and then management bandwidth is depleted, and corporate resources depleted. Shareholders are exhausted, and a lot of times, and the stats are varied on this, but a lot of times by the time the company gets to year two, even if they've won, they're considering a sale process. Their board looks completely different because they've undergone a voluntary transformation, or the activist just waits around for the company to have another quarter that's a miss, and they come back asking for more. So while we do aggressively fight and we usually make proposals to resolve these matters, offers that really no one should refuse, we do find that the boards and the companies that remain independent the longest are the ones that we can achieve long-term peace treaties for. So when we look to settle these things, we don't look for a one annual meeting settlement period. We look for 2 years, 3 years. We got 10 years from someone recently. We want to get our clients, even though it's against our economic interest, we want to get our clients the longest runways of peace and quiet possible so management can prove out their plan, and the board can help management execute on that plan. We usually counsel our boards about those two paths. That way they can make a fully informed decision about which way to take it. Again, sometimes you got to take something all the way to the vote. We love doing it. We do more of it than anyone else. We win most of the time, but there is a downside. And these fights, Desi mentioned what's disclosed in a proxy statement. The proxy statements generally disclose about 10% of the actual costs that a company incurs. Most companies around 250 million market cap to 5 billion will incur 5 million or so of expenses in a contest that goes all the way. Now, some of that can be covered by insurance. but it's still expensive and can be very depleting. Now, on the next slide, this is just to demonstrate that no company size is impervious to activism. However, it's generally the companies in the billion-dollar-ish range that actually take things all the way. The larger companies really don't want to be in the Wall Street Journal or the New York Times, and they generally resolve things either with an agreement or without an agreement sooner rather than later. The companies that are smaller than the large and mid caps generally do have the courage to fight for their convictions, and those fights tend to go on a little bit longer before they go to the annual meeting or they get resolved. Maybe go to slide 15.
Okay. So this section is getting into what one of these campaigns or proxy fights would actually look like. My qualification here is that these campaign stages will differ depending upon the shareholder and the company and the relationship between them, the engagement history they've had previously, and also who the activist itself is, because some of these activists will take more aggressive approaches, move at a quicker pace than others. Typically what we see, though, is what I mentioned earlier, is the activist doing a screening for companies to find a target. This can be done by looking at the company's total stockholder return, again, going back to 1, 3, 5 years, 10 years, looking at their earnings releases, earnings reports, redlining their 10Ks and periodic reporting statements to see what's changed over time. And once they've honed in on a particular company, they'll start to build a stake in it. Usually we see this as like a toehold stake, something south of 5%, because there are the disclosure obligations under 13D where they'd have to include disclosure about the activist, its fund, principals, historic stock purchases over the past 60 days. So really activists want to make sure that they're ready to go public with their campaign before they trigger these sorts of disclosure obligations. There may be other regulatory regimes to consider if you're trying to accumulate a large amount of the company in terms of antitrust, or if you're going even to the 10% threshold to maybe be deemed a Section 16 insider. So a lot of this does start on the private side where the activist is engaging with the company. They may reach out to their IR, like their investor relations officer, may want to set up a conversation with board or management members. And they start off private in part so that they can kind of test the waters to see how the company is going to react, what the company's position is, how receptive they are to the activist thesis. And if those conversations are not progressing in the way which the activist sees to be beneficial, only at that point then they will start to bring their campaign more into the public light. Sometimes we will see activists that skip some of these steps and will go directly to submitting a nomination notice with their slate of directors to the company. This is a little bit more of an aggressive tactic, but not unheard of. When you get to that stage where you have a shareholder submitting their nominations, that's where I really see the proxy contest begin in this third column here. And I think that's the one that we'll probably focus on the most in these next slides. We do see litigation in these fights or unsolicited bids to take a company. But again, these are a little bit more aggressive tactics.
Just add, it's very important from the company perspective to start preparing for these early stages as early as possible. So when we're looking at stake building and private engagement, companies need to be on high alert for when they could be in the potential stake building or private engagement phase. And where that starts is the day after your annual meeting. You'll know at your annual meeting, most likely what your vote result was. You've got 4 days to disclose it under your 8K rules, 5.07 8K. And that's where you're getting the most important feedback from your shareholders. There used to be, there was a mayor in New York in the late 70s and early 80s, Ed Koch, and I grew up with him, and when he ran in the 80s, his slogan was, "How am I doing?" That's what a board is getting at the annual meeting. It's a "How am I doing?" Your shareholders speak up. And even though your boards like to go away for vacation in July and August, right after the annual meeting, that's the point where management should be taking inventory. You're getting lots of feedback. You're getting your vote results for your directors. You're getting say on pay results. If you've put up other proposals, like on comp, if you're amending your comp packages, you may have environmental or social proposals too. You're getting a barometer of how your shareholders feel about your board and management and how you're performing. You also have ISS and Glass-Lewis reports, which is a readout of how you're doing. And oftentimes those ISS and Glass-Lewis reports will be favorable for the company in terms of a recommendation, but they'll have some red flags in there. We have concerns that there might be a slight misalignment with performance and comp. We're not going to ding you on it in this year, but we're going to keep an eye on it. And we're going to recommend for you, but stay tuned next year. So you're getting all these data points and these readouts, and you know who else is getting those data points and readouts? Shareholder activists. Carl Icahn, Paul Singer, Jeff Smith at Starboard, the folks at D.E. Shaw, and some of the other smaller activists or not as busy activists, they're all looking at these annual meeting results. They get the ISS and Glass-Lewis reports. We find that a lot of times boards and management teams are very happy with the 91% vote in favor of the reelection of directors and the 88% vote in favor of say on pay. We say that's blood in the water. The activists see that. You're now on the activist screen. The next thing that they do is they look at the ISS and Glass-Lewis reports. Are there other concerns? And why do they look at ISS and Glass-Lewis? Because that's a good test for how your institutional shareholders are going to vote. And now the next thing the activist does is they say, great, there's some negative shareholder feedback here. Is there an economic case for this company to be sold? Is there an economic case for the board to be doing something differently? Should the CEO be exited? And the activists will start building that campaign months before they actually ever show up or do anything. So what you can do as in-house attorneys is gather that data, and I know it's very hard to get an audience, particularly over the summer, but you got to get this data in front of your nominating and governance committee, in front of your compensation committee, in front of the rest of the C-suite, so it's on their radars. The last thing that you want is to really be carefully considering these things in the next proxy season when the activist has already been pounding on your door, they're public, and it's too late, and it's all going to look reactive. You want to have a proactive engagement process and assessment process here so that when the activists do show up, you don't look flat-footed. In terms of engagement, we talk about private engagement. Oftentimes, these fights, and again, this is against our own economic interest, oftentimes shareholder activism campaigns can be completely avoided at the private engagement stage. Usually what happens when these things end up blowing up is there's a really bad first phone call, or a management team is attending a conference and there's a breakout session at the conference and Starboard value is in the breakout session, and management asks the IR firm to kick Starboard off of the breakout session engagement process. And that sets a really bad tone for the engagement. So we like to get in as early as possible, and instead of shooing the activist away or telling Carl Icahn, which I think happened recently in Southwest Gas, telling Carl Icahn, we're not going to return your phone call for 3 weeks, having in place a process for dealing with an activist, if they do come in an unsolicited basis, we find leads to better outcomes for companies. Again, we still have in our toolkit the tools to win if the initial engagement is bad, but oftentimes we find there's no acrimony if the earlier stages are handled constructively and properly.
So should you find yourself in the situation that there is a activist has submitted nominations, this is generally what you would expect in terms of the timing of an actual proxy fight. They tend to be 3 to 5 months in length. I mean, we've seen certain campaigns that have wrapped up and settled in about a week, and others that have dragged out for more than a year. But on the whole, this is about what you would expect. And a lot of this is driven by what your company's bylaws say in terms of the advance notice. How much notice does a shareholder have to give in order to submit nominations or submit business proposals? Usually we see these somewhere in the range, it's a 30-day window, give or take, 90 to 120 days before the anniversary of the company's last year's annual meeting. And this kind of dictates how much time you have. Again, like Lawrence mentioned, it is much better to prepare ahead of time. But if you find yourself in this situation, this is laying out this sort of timeline to see all the different milestones and items to hit during that solicitation window. So, once you've received this nomination notice, review it, and really start thinking about the SEC disclosure that you're going to be required to provide, because in contested situations, your proxy statement is going to be beholden to additional proxy rules that a uncontested proxy statement is not required to have. You have to file a preliminary proxy statement, so it's important in terms of building in time to your timeline, because you have, at a minimum, the 10-day review period in which the SEC is looking at your proxy statement, providing comments. Additionally here, the activist is also looking at the company's proxy statement, scrutinizing it to make sure that it's dotted every I and crossed every T to comply with all the proxy rules. And the activist may, in turn, write a letter to the SEC suggesting that the company, or that the SEC require the company to make certain amendments to its disclosure so that it's in compliance. So this process can really take a more extended time frame than what companies are accustomed to seeing. Once you have cleared with the SEC, you file your definitive proxy statement, that's when you really start soliciting shareholders for their votes. And we see this campaign period about 6 weeks in length. And we see this when we put out the fight materials, there's press releases, fight letters, when we start looking toward our interactions with ISS and Glass Lewis and preparing a presentation to them in terms of advocating for the company slate that they will recommend on our card. And all of these fight letters, fight materials, are what we see leading up to, including the week of the annual meeting itself when the election takes place.
The interesting thing, and I used to be a securities and fiduciary duty trial lawyer before I started doing activism full-time. I've been doing activism full-time about a decade, but the first half of my career I was a trial lawyer. And the interesting thing about being a trial lawyer, if there is anything interesting about being a trial lawyer, that's probably in another room presentation. But if there is, the interesting thing there is the trial lawyers or the lead lawyer in an arbitration, you're asking the questions, you're making the arguments, you're taking the witnesses, you're making the opening and closing the interesting thing is, in these proxy fights, it's a public trial for the board and management team, but the lawyers and the other advisors are prepping the board and management team and scripting it, but instead of the lawyers actually getting up and making the arguments, it's the board and management team. So you really need to figure out who are the members of the board and the management team that you actually can show in front of ISS and Glass Lewis and shareholders. Some have higher and better uses in the boardroom than being the public spokespeople. And a lot of training goes into this. This period of time, particularly the 5 to 6 weeks leading up to the vote, it's very intensive. It takes a lot of board time, and there is a lot of prep that goes into it. It's just like trial prep. If you've had the misfortune of being through a trial or an arbitration, it's just as intensive. Except in this case, those are sometimes you have bet the company, IP matters. This is usually a bet the company board matter. And the frustrating thing for us lawyers is we can't speak up on these phone calls. All we could do is write notes to the board and management team to try to make sure the right points get across. But it is very intensive, and there are big teams that are put together. You have lawyers that are highly specialized. You know, we clear probably 10 highly specialized proxy statements a year. We probably prepare another 10 that never get filed just to get ready for a proxy fight. But you also have investment bankers and boutique advisory firms that help you put together an investor presentation that's very specified to a shareholder activism campaign. It's basically your standard investor presentation, and then there's a section on why your board is great and should not be kicked out, and why the other side is crazy and their ideas don't work. And then you're asking folks to vote for your propositions, your proposals, and your slate. You also hire a proxy solicitor, which you're probably working with on a regular basis for some routine matters with your shareholder votes. But the proxy solicitors do they do a lot of things, but what we like to call it smiling and dialing. They're getting a list of your shareholders. They're making calls through a call center. They're making calls through principals to try to get your retail shareholders to come out of the woodwork and vote that don't usually show up. And then you have a PR firm, and there are highly specialized PR firms out there. There's really just a handful that have a lot of experience creating the press releases, helping to create the investor presentation, the internal talking points, and other media relations matters. So it's a big team that gets put together, and oftentimes there's 1 or 2 group calls a week. It's very intensive. And then you kind of don't know what to do with yourselves after everything is over, except to go on vacation because it's the summer. I have no idea how we're doing on time. We have a mock proxy fight in here, but we also have tips for advanced preparation. I want to make sure that we can hit.
For like 5 minutes.
We have 5 minutes? Okay. We'll have to do the mock proxy fight some other time. Let's talk about advanced preparation. And Desi, why don't you kick it off, and I'll join in.
Sure. So some of these are tips that I think will be reiterated from earlier in our presentation, but the keys being, the time to prep for this is now. It's not when the activist is already at your doorstep. It makes it a lot easier for the company to have a solid foundation of what, even what would be expected in one of these fights, what you should be looking at in advance, to set up the company in a way that's most beneficial should you need it in a full-blown proxy contest. Ways that we do this are by working with investment banks to think about, at least from the financial analysis perspective, putting ourselves in the shoes of the activist. What are the things that an activist would look to target at your company? Again, that's looking back at maybe the total stockholder return over various time periods, maybe looking at the corporate governance of the company and the structures that are in place there. What policies have ISS and Glass Lewis put out about those particular practices? Same thing with your top institutional shareholders. Do they have a policy in which they vote on companies that have those corporate governance characteristics? Doing an assessment of what director vulnerabilities there may be in terms of board diversity or board tenure, and even looking at the company's organizational documents. So reviewing your bylaws to see what can be updated in them to have robust advance notice should an activist want to nominate its directors. Looking at the company, if the company has a shareholder rights plan, either on the shelf or maybe preparing one in the event that the company needs to use one and can enact it very quickly. All of these are ways in which we can prepare the company well in advance so that it doesn't look as if the company is just being reactive to an activist. Also on here, I know Lawrence touched upon the stock surveillance, making sure that you know who is in your shareholder base, how they tend to vote in the past. Do they look to the ISS and Glass Lewis recommendations, or is it more on a case-by-case basis? Maintaining an active stock watch to see, what kinds of movements are happening in your stock, what, shareholders are doing that stake building that we spoke about. Even if shareholders are moving their shares into record name at the company, right? Especially if your company's bylaws require shareholders to be a record shareholder in order to submit nominations. That's something that we keep a close eye on, especially during that 30-day nomination window.
So, I think if I were to recommend doing anything after your annual meetings this year, hopefully none of you have activists lurking around right now. Happy to talk about that. If you do have activists lurking around right now, we're obviously very interested in that. But after your annual meeting, make sure that you have a team together in case something comes up for next year. Get your team together. Get your specialist law firm, get your specialist bank or boutique advisor, get your proxy solicitor, get everyone lined up, have them meet each other, and make sure that your board knows them, at least in the fall, so that if something happens, the bat phone can ring directly to them, and you could assemble your team. Gather all the data that you possibly can. Annual meeting results, ISS and Glass Lewis. Hire a specialist advisor. There are financial advisors out there that have former ISS and Glass Lewis decision makers on their team. Have someone come in and do an ISS mock exercise. Have someone come in, view your company through the ISS and Glass Lewis lens, so you get a really good sense of how you might actually fare in a proxy fight. And that's a boot camp. We do boot camps. We do them with banks. We do them with proxy solicitors and investor relations firms. Look very carefully at your D&O insurance. This is usually a topic that puts everyone to sleep, but we're getting millions of dollars of activism defense expenses covered in our proxy fights for our clients every year. And most companies think that you need a lawsuit to get coverage under your policy. There's normally 2 or 3 types of coverages under every D&O policy that require no lawsuit, that cover activism. You just have to know where to look, and then you have to be very experienced at shaking as much money out of the insurance carriers as possible. As you procure your insurance now, you're probably going through renewals. Make sure to ask, because if the house is burning, good luck getting fire insurance.